Retail sales came in flat today, highlighting the fact that the U.S. consumer is facing many economic headwinds. For more on today's numbers, let's bring in Lori Wachs, founder of Crossledge Investments. Before starting her own firm that invests in retail companies, Lori was a retail specialist at Delaware Investments. She joins us now from Philadelphia. Welcome back to Bottom Line. Always a pleasure.
My pleasure as well.
Lori, what happened in August? We had several private market reports from auto dealers and retailers showing sales were up last month. Is this all about the lack of jobs at this point?
You have to be careful when you look at the retail sales number when it comes in. They show this sequential number, which shows flat, versus last week's same-store sales report, which is how they did on a year-over-year basis, which showed up around 5.5%. So that's the discrepancy there. As it relates to jobs and income, we see that that continues to just look pretty bleak. We just saw household median income down for the third straight year, and that really continues to pinch that lower to moderate income consumer. Interestingly, on the report that just came in, we all thought that there'd be some weakness at the higher end given the volatility in the stock market, and that consumer kept on going.
Lori, I'm glad you mentioned that because that segues nicely into my next question. How did specific retailers catering to moderate and low-income consumers perform versus those, as you mentioned, with more affluent shoppers?
Right. If you look at, say, the Kohl's and the Pennies of the world, they were down about 2% year over year. And it was an interesting telling month because this was the time that these retailers were trying to push through some of those price increases that they had to try given the increases in cotton and their cost increases. But the consumer just voted with a big giant no. We are not going to accept it. So these retailers are now going back to the drawing board and saying, we've got to bring these prices down and step up our marketing. So stay tuned for some earnings risk there. But that higher end consumer up 6% at Nordstrom's, at Saks, they kind of shrugged off debt ceiling, market volatility, and we're out there in strength.
Lori, there was a deceleration in apparel sales. Was this a result basically of Hurricane Irene?
We'll have to stay tuned, but I tend to think so. It had the biggest deceleration versus the prior month, almost 150 basis points. And we heard from the retailers that the month actually improved as the weeks went on once they got past the debt ceiling issues. And then Hurricane Irene hit. So I do think that this will turn out to be a temporary blip, and we'll obviously stay keenly focused on it.
Lori, how close did growth come to stalling last month? And are today's numbers a sign the second half of the year will see growth still struggling to gain traction?
Clearly, it gets pretty scary when you see an overall retail number flat sequentially. And when you get the first potential negative headline, it's really going to give people some pause. But again, I encourage people to look at the overall top line sales increasing about 5.5%. That's still within the band of this 5 to 7% that we've been seeing most of this year. So at the lower end of the range, but really no cause for panic at all yet.
Lori, final question, about a minute left. In a word, can we say that the consumer at this point is still cautious?
You have to separate it. That moderate income consumer is very cautious. They have no slack in their budget.
And if I might ask you quickly, because I was reading some other stories on the Bloomberg terminal today, there's a big correlation between what's going on here, especially with the retail numbers, and how that relates to oil, because fuel prices are involved in this as well, aren't they?
They absolutely are. And again, that plays into that bifurcated consumer because that lower 10 to 20%, it's such a disproportionate share of their overall budget that with gas prices up 35% year over year, it has nowhere to go but to come out of their discretionary cash flow.
Lori Wachs, founder of Crossledge Investments, joining us from Philadelphia. Lori, it's always a pleasure. Thanks so much.
Oh, again, thank you.